Hey there, it's Will. I'm going to go through the markets, the charts for the various market indices, and then get into some sector ETFs and inverse and leveraged ETFs as well. So let's get into it. If we look at the NASDAQ, we had sort of a bounce at this recent June low here, like a double bottom potentially. And we got up above the 8 EMA here. So we did that before and we came back down. We just got a little bit above the 50-day. So sometimes it's not going to work out. But also if you want to be a little more cautious, if you look down here, you didn't quite cross the price percent oscillator, which is momentum, like MACD. We didn't quite cross this line. And this histogram here, these red bars can help you see that there's still a distance between the moving average and the price percent oscillator. So the green bar would be when it crosses and you start seeing a gap between the moving average. The other thing you can do is when you get above zero, a lot of times that is above the 50-day moving average as well. So a lot of times you don't just buy the first candle above the 50, you wait for it to go above and then pull back. So sort of like this, break through the 50, pull back, and then you go up like that. And that's a kicker signal, which is a candlestick pattern. So you have a down candle and then an up candle that's at the point of the high of this down candle or above. So it's like the reverse. This one went down, that one went up. That's a strong signal there. You can see here it came up and it hit the 50 and bounced off. So when you're below some of these moving averages, it's a risky, it's a risky time unless you have a good distance from where it is to the 50. You're likely going to reject at the 50-day. It's a good point to do an inverse ETF. Like if you break through and then you start to go down, like you don't break back up over the 50. So if you see it coming up, you wait for it to pull back. It is a bit of a shorting opportunity. You don't know how far it's going to go, but so right now with these, most of these indices are the same. You had this downtrend. Like I drew the line which touches the top here, touches here. This candle, a bunch of candles. I didn't widen it out to go above this candle because there's so many points of contact here. But the main point is that we're right at this trend line here of downtrend. So we got to this point, and now there's a bit of a negative, like a down candle in the pre-market today. If you want to get TC2000, which is what I'm using here, check out the link in the description below. You can get a free trial or $25 off your purchase, your subscription. So one of the features with TC2000 is a pre-market. Up here you can see it says 739. So you're seeing the pre-market. And you're able, in some of your brokerages, you're able to buy stocks in the pre-market if you want. There's not as much volume usually, but that's an opportunity you could look into. So the question right now is it going to be able to break through this downtrend and establish a higher low? So like right now when you have these first breaks like this, it's an early entry, it's a risky entry. But what you want to see is like back here where you have, it comes up and down and then back up, and each time it creates a higher low here. So that changes the trend from going down back up again. So it's a bit early in the trend. And then also here we see that it's crossed over the 50-day, or I mean, yeah, the exponential moving average has crossed the price percent oscillator has crossed the exponential moving average. It's a 9-day average, but we've got a cross there. But it is a bit early because the trend is right there, the trend line. So we are above the green volatility stops as well. So if I go to S&P 500, I can do the same sort of thing. We're right at that trend line right there, and there's a bit of a negative 0.96% right now in the pre-market. But we have crossed. If you want to look at longer term trends, you can go to the weekly chart. So up here on TC2000, you have minute, 10 minute, 15, and you can click a down arrow and all sorts of different ones. You can customize the ones that are up on here. But if I turn off the the drawings, you can see there's a bit of support at this 200-week moving average, but we haven't established, this green volatility stop yet. But, when you're in a strong weekly uptrend like this, that helps when you go back to day trading to see that, or swing trading for a period of days, that you have this uptrend, on a weekly basis, on a longer term. So this is like the early times, because you have on the weekly, you do have an up candle, but it is at a 200 support level. So that's a chance you can take. You could use the 200 weekly as your stop. But you still have a red volatility stop. So you're trying to get this early trend change if you buy right there. And then Dow Jones, it's all the same. Depending on where you draw this line, you could draw it way up here, but basically there's a resistance of that support line. You also have other moving averages. You have previous lows. What we want to see, if you look at the June low, we kind of broke below it. And if it pulls back and goes back up again and supports at that low, that would be the start potentially of an uptrend. So you see here, it's good to look back at the charts, and you get this initial pull, up rally here, pull back, and then it starts to go up, and you've established higher lows here. And that can give you indication of a uptrend. Russell 2000, same sort of thing. You're just breaking out, but you want to see if it can sustain. And it did support at the June low as well, so you have this double bottom. This one's kind of better than the other ones. It's actually supported at the previous low without surpassing that low from June at this point. And then when you're looking at the markets, like, even though I use charts, obviously technical analysis, you have to be aware of the macro, like the sort of the interest rates and the US dollar and stuff like that. So when the US dollar is going up, you have a challenge to the markets. You also have a challenge to gold. And you also have a challenge for the emerging markets, like all the other countries, because they do a lot of imports and things in US dollar. So, it hurts the emerging markets as well. So it's a bit early, but if you look at in the trend, it's a bit early for a reversal. But if you look at TBF, which is a treasury bond, it's 20-year inverse. You can see, so this goes up when the interest rates go up. So the interest rates are going up, and then it got a little bit crazy, parabolic, a little bit away from the trend, and then it pulls back to the trend. And we have an up of 0.14% right now, but if this supports at this trend line and starts to go up again, then that's trouble for the markets. So this little pullback has been coinciding with the little rally we've had in the markets for the past couple of days. But we'll see, like, if you're patient and you want to see what happens after it, does it break through this? Or does it get supported and continue to go up? And similarly, with the UUP, which is the US dollar index, you can see that now we have this up candle of 0.5%. And if it does something like this and starts to go up again, but you see, like, when you're looking at a chart, if you look at the 50-day, say, when you start to go up like this, you want to take some profits, or if you have it, you're starting to go parabolic. And so now we crossed the price percent oscillator, or MACD, but this is a little bit of a lagging thing where, like, if it starts to go up, this will turn around fairly quickly. But then this one here, a little tricky thing sometimes is it goes a little bit past the 50-day moving average and then it goes back up. So it's not just 100%, but you're waiting for that turnaround. And that would indicate, like, these, the dollar and the 10-year treasury yield are both kind of moving similarly. So right now, this is coinciding with a bit of a negative opening market right now, but we'll see what happens. But if you're patient and you want to see, like, the uptrend continues, or if does it really break down, then that's going to determine if we really have a rally or if it's just a short-term spike in the markets or short squeeze or something like that. The other thing you can look at is the VIX. If you look at the VIX, when you get up to 30 plus, it's quite volatile. So I drew this line before where I had it across the tops, and you can see how it hit that and starting to pull back now. This is actually from yesterday. So the VIX is up today. That's why I use this VIX-Y, VIX-Y. There's a little bit of a uptick here, 1.4%. So when you start to get this bounce down like this, the market started to go up because it hit the 200 and it's starting to come back down. We'll see what happens if it continues to go up again. Obviously that's going to be bad for the market. So sometimes, you can be patient and wait for a little more established reversal before you get in. So because of the negativity, I'm generally leaning bearish with this potential, rally, because this is a time in the markets like October to December where you can have a good rally historically, especially during a midterm election year. So because of the volatility, I'm not really comfortable using some of these leveraged ETFs and also these ones that are going up a huge amount, like 6 or 7%, because if you buy this one and it's like FinX and it goes down like, it can go down up and down 6%. So I'm sort of sticking to the indices right now just because of the volatility, but even the indices are going up a lot more than normal. Like they're going up 3 or 4% sometimes, like the NASDAQ or the S&P or the IWM, Russell 2000. So, but if you want to look, I've done this before. I've got inverse ETFs in the US and Canada. The big ones are the SH, DOG, PSQ, TBF, RWM. Those are kind of the main ones for the indices, for the main indices inverse. But then you can get into some sector ones. There's Bitcoin in Canada, BIDI. Obviously that one's going to go up and down quite a bit. SEF. I mean, Bitcoin's been a little bit less volatile, surprisingly, than the markets in terms of percentage going up and down. But normally it's quite a bit more up and down beta to the markets. So if the US dollar starts to continually go down, like reverse, then you can look at this UDN. It's a new one I added, which is a US dollar bearish. And, obviously you need to see more than just a little uptrend, but higher lows breaking up above the 50. If the 50 was curling up, that would be nice. So that's the opposite of UUP. In Canada, there's a DLR, which is just US to Canada. Oops. And that depends on what Canada does in relation, because like Europe is weak right now compared to the dollar, and you got the euro and the yuan, like the Japan yen, stuff like that is weak. But if the resources, oil and gas, do well, then that could strengthen the Canadian dollar. So it acts a little bit differently. But when I saw this, when you see something going parabolic like this, way up like this above the moving averages, and more vertical, you're gonna get a pullback. It's just the way things work. So that is an option for that. And then the leverage trades, which are 2 or 3x, can get a bit crazy. But J Dust, Junior Gold Miners, Bear. Some of these have an update, like they're not open yet in terms of. This is PIL. It's a medical bull. It was up 7.3%. It's not actually changed for this morning. It's not open for trading as for this. But you have Web, Internet, Bear, 3X. I'm just showing you some of these so that you could put these in your own watch lists. So with TC2000, I have a whole bunch of watch lists. Like I'll show you the ones I have. They do change over time, but Adam Koo is a guy on YouTube. He does a lot of he bases it on like intrinsic value of the company, like fundamentals. So over time, I've put some of the stocks that he likes in there. It's not maybe 100%. Canadian sectors, Canadian stocks is self-explanatory. Currencies, if we look at that one, you've got I put gold and silver in there as well. I don't look at that too much, but because I have other things, like I have TradingView, which has some old gold prices and silver on it. Growth stocks. I don't know what this. I can't remember what this one was, but I don't know what the reason for that one was. I can't remember. I should probably delete that one, but sometimes you got to go back and clean up your stuff. But inverse leverage, I already talked about. Markets is that one there. My stock. So whenever I buy or sell anything, whenever I buy anything, I put it in my stocks. And then when I sell that stock or ETF, I copy this to previous trades. So what you do is, like, say you're in this one you bought and then you decide to sell. You click on this plus, add to personal watch list, and then it gives you all your watch lists, and then you say previous trades. And then so then I can go back, like if I've sold things, and see how they're doing. Because sometimes you check back, you're curious, like, oh, I sold something and now it's up or something like that. So, I keep an eye on things that I sold for curiosity sometimes to see, if it's turned around or something like that. Because you can get back into things just because you sold them. You don't have to just forget about them. Watch lists, personal. Possible buys, like if there's something imminent and I want to just see, like, if it breaks a trend or if it pulls back and it gives you an opportunity. Another way to go is to use alerts. Like if you want to see something break a trend, you can put the stock in an alert and you don't have to, like, but these are like imminent buys if I'm thinking like, yeah, I really want to get a few of these. There's also flags. You could flag a stock and look at the flagged items. Before I show you that, I'll just finish this. Pullback opportunities are when you have an uptrend, but the stock or ETF pulls back, and those could be done through formulas. Like I have a pullback scan, but sometimes if something's in an uptrend, but it's like, say it's too high and you're thinking, oh, I'll buy it when it pulls back. It's something like you can just take a look at it visually and see, if you're getting if there's something that is pulling back to a trend line where you could get into it. There's another guy, Puru Saxena on Twitter, who's got a lot of high growth stocks as well. And then the US sector. So if I just look at his, it's kind of like that growth stock thing that I had just showed you earlier, but these are all in his watch list. He's looked at like cash flow and revenues and stuff like that. And then you can scan these and sort them however you like. If you have a watch list and you want to put it on the screen, like on the left side, say if I go to growth stocks here, you click this arrow button or move window and you say move, and then it shows you if you want to put it on the chart or if you want to put it on a tab up or down here. I'll just hit escape, get out of that. So if I wanted it on another tab up here, I would click that box. If I wanted it on a tab down there. So you can put a lot of stuff in a short space. That's why I really like it. So that's about it for today. If you want to get the TC2000 and get all these features that I'm using, you can get a free trial or $25 off your subscription. I've got the US Gold plan I've got the Gold membership with US real-time data, so I can see the stuff in real time and get the pre-market prices as well. You can look at the different levels and see if you want to go higher or lower than that. All right, guys, good luck. We'll talk to you in the next video.